Sensex और Nifty में गिरावट 13 जनवरी 2025 का विश्लेषण. Hey there, market junkies. It's your man Finaxiom, and listen up. Today we're diving headfirst into the bloodbath that was the Indian stock market on January 13th, 2025. The Sensex and Nifty took a serious nosedive, and we're here to dissect exactly why. Was it a temporary blip, or a sign of something more sinister? We'll break down the culprits, from fleeing foreign investors to skyrocketing oil prices, and give you the insights you need to navigate this volatile market. Buckle up, because things are about to get wild. Let's talk about those fickle foreign portfolio investors, the FPIs. They loved India's growth story, but now they're leaving fast. China's reopening is attractive, and fear drives them to China. They see red and sell risky assets, including in India. When FPIs dump large-cap stocks, Sensex and Nifty feel the pain. Crude oil, the lifeblood of the global economy, is volatile and throwing investors through a fiery hoop. Geopolitical tensions in the Middle East mean supply is down, prices are up, and India is feeling the heat. Soaring import bills, a weak rupee, and industries like aviation and logistics are getting slammed. Rising oil prices are fueling inflation, squeezing consumers and their wallets. But hold on, the bad news express isn't stopping there. Let's talk about the global economy, shall we? The United States, the big kahuna of the financial world, is looking shaky, my friends. Treasury yields are climbing faster than a homesick angel, interest rates are high, and the fear of a recession is hanging over Wall Street like a bad hangover. And you know what they say, when America sneezes, the rest of the world catches a cold. India is no exception. Global negativity is spilling over, dragging our markets down with it. Now, let's zoom in on some specific sectors that are feeling the pain. Banking and financial services, once the darlings of the market, are facing a reality check. Profit booking after a long rally and the fear of rising interest rates putting a damper on credit growth have sent shivers down their spines. And then there's the IT sector, grappling with weak global demand and delays in IT spending by international clients. It's enough to make even the most optimistic techie reach for the antacids. And let's not forget the auto industry, struggling to keep up with rising input costs thanks to those pesky oil and metal prices. Earnings season is upon us, and so far, the news hasn't exactly been music to investors' ears. Some key players, especially in the mid-cap and small-cap space, have delivered disappointing results, leaving investors with a bad taste in their mouths. Now, all eyes are on the big fish, the large-cap companies in crucial sectors like banking, IT, and FMCG. Will they be able to turn the tide and restore confidence? Or are we in for more earnings disappointments? Chapter 6. The Rupee's Freefall, Adding Insult to Injury. And as if all of that wasn't bad enough, we've got the rupee taking a nosedive against the mighty dollar. Like a boxer on the ropes, the Indian currency is getting pummeled by rising crude oil prices, which are driving up import costs, and those pesky FPI outflows, which are increasing demand for the greenback. And you know what a weak rupee means? More expensive imports, which translates to higher inflation. It's a vicious cycle, my friends. Chapter 7. Gray Market Premium, a canary in the coal mine? Now let's talk about the gray market, that shadowy world where IPOs are traded before they hit the official exchanges. And guess what? The gray market premium, or GMP, for upcoming IPOs is dipping faster than a skinny dipper in a cold lake. This, my friends, is not a good sign. A weak GMP reflects waning investor confidence in the primary market, and that negativity can easily spill over into the secondary market. It's like a domino effect, and it's not pretty. Chapter 8. CB Regulations, throwing a wrench in the works. And just when you thought it couldn't get any worse, the Securities and Exchange Board of India, or SEBI, decides to shake things up with new regulations. We're talking tighter margin trading rules and restrictions on algorithmic trading. Now, I'm all for making the market safer, but these changes have created uncertainty and made traders more cautious. And what happens when traders get cautious? They sit on their hands, reducing market participation and liquidity. Outro, the road ahead, navigating the storm. The perfect storm sent the Sensex and Nifty tumbling on January 13th, 2025. From fleeing foreign investors to sky-high oil prices, weak global cues, and disappointing earnings, it's been a rough ride. Investors are understandably nervous, seeking refuge in defensive sectors like FMCG and pharmaceuticals. Remember, even in the darkest times, opportunity knocks. Stay tuned for more market updates and insights.